What I think investors should keep in mind is um, the value that has been created by this sort of bifurcation and disconnection that small exploration and mining companies have to the commodities that they're exploring and mining, especially in uranium. The uranium spot is not very liquid at the moment. A small amount of selling has brung, has taken us down to these levels, and yet the contracts into the future are quite higher.
Welcome to another edition of CEO and Market Expert Interviews. I'm your host Lucian. Most of you know me as Triangle Investor from social media. We are covering today Foremost Clean Energy, a new significant uranium player with 10 projects across the Athabasca Basin, optioned from the strategic partner and a known uranium company named Denison Mines. I'm joined by Foremost President and CEO, Mr. Jason Barnard. Jason, welcome to my show.
Oh, thanks for having me, Lucian. It's good to see you again.
Good to see you again. This is not our first interview. We did one together with David Cates, CEO of
Yeah.
Denison, and one together with your advisor, Jody DeRouge. Today we
Yes.
will focus on your recent announcement of 6.5 million uranium exploration program across the Athabasca, and we will cover some company developments, plans, and metrics. But first things first, we didn't cover your origin story and background in our prior interviews, so I would like to start with that. Tell me a word or two about you, your background, your origin story, and how did you become a Foremost CEO?
Oh, thanks, Lucian. How did my story starts as a young stockbroker, which has given me the capital markets experience that you need to be the CEO of Foremost Clean Energy. At the age of 24, I'm going to start aging myself, became a stockbroker in Vancouver. I worked for a company called McDermott St. Lawrence Securities that subsequently was bought out by Raymond James. And for 14 years, I was a stockbroker, ending my career in 2004 with Canaccord Genuity. So I had done quite well and actually retired as a stockbroker. But the markets, when you're an investor, it sucks you back in. And I've always been an investor. So I started incubator funds whereby I would finance small caps and news stories in Canada. And that culminated in me owning a large part of many companies and having quite a bit of success. One of the companies that I ended up owning and becoming a major shareholder in was Foremost Clean Energy. Its previous name was FAR Resources, and in doing so, I finally took on a CEO role. I first entered on the board. And one of the reasons why I did that was I had to take over management, and that included being on the board when we listed on the Nasdaq, which we did just over a year and a half ago. So I came in because the company needed that kind of expertise, got us listed on the Nasdaq, which isn't easy. And then I had already taken on the role as president CEO, and now I've been in that role for about a year and a half.
That's a very good story. Yes, you
Yeah.
have experienced CEO. I like to hear that always. Jason, before we touch on the company's developments, how do you see uranium market today, and what are the main things that uranium investors should keep in mind?
Well, what I think investors should keep in mind is the value that has been created by this sort of bifurcation and disconnection that small exploration and mining companies have to the commodities that they're exploring and mining, especially in uranium. The uranium spot is not very liquid at the moment. A small amount of selling has brung, has taken us down to these levels, and yet the long-term contracts into the future are quite higher. So you've got to look at the situation, for value, and then if you're also buying a company like Foremost Clean Energy, the upside could get quite good when these stocks are in favor again. And I would say that the market might be missing the boat on Foremost Clean Energy because we are financed. We have a most strategic partner in Denison that owns 20% of our companies. They participated for $1.8 million in our last $10.5 million financing. So we are financed, but we are financed at 3 times the share price. And the reason for that share price, sort of backing up, quite like it has, we are in the Nasdaq. So you can get volatility in a strong market where it takes your market cap and your share price up, but also the opposite is going to happen from time to time. So our valuation is lower than it was because we had to consolidate to go on the Nasdaq than during COVID. So now we are nothing. We are exponentially better company than we were during COVID, but yet this valuation is lower. So with COVID, there was all kinds of expectations of low demand and problems with economies, but that's not the case. This is just Trump tariffs and very volatile market. So it's created a very good value situation, but that also when these stocks get popular again with the nuclear power trade, especially in the U.S., like they were buying us up, all of a sudden, you will get good gains if you bought at these lower prices rather than try to chase it when the capital comes flowing back in. So the commodity spot price I don't think represents the long-term prices that will come in uranium, meaning you're buying an investment in a good uranium, at a good uranium time, you're buying at a low valuation. But also there'll be all kinds of, buying that comes once all of this, chaos leaves the market and there's more normalcy coming into the uranium space and also junior miners.
Yeah, normality is a very good term. We miss normality at the moment. Agreed
Yeah.
on that.
Yes.
Jason, 6.5 million uranium exploration program is on the table. That is actually one of the biggest exploration programs this year in the Athabasca. As I
Yes.
saw it, it is a follow-up drill program on Hatchet Lake uranium property, as well as planned exploration on Murphy and some other projects as well. So let's go first. Let's touch on the Hatchet. What are you planning to do in this exploration program on Hatchet?
Yes, Hatchet Lake, very exciting. And the reason why it's so exciting is this is an advanced stage exploration property. So we're not, going in there for the first time or even the second time. And this property, we say follow up. There has been many hits of uranium mineralization on the property, and the uranium mineralization hits have been below the unconformity. So if we look at the graphitic fault and we keep trying to drill back to the unconformity like we plan to do, and that drilling program is just about to start. I think we've announced it. Um, we keep drilling and try to find, of course, higher grade and bigger intersections of uranium heading back to the unconformity. So we've hit in historical holes 2.5% uranium before. and we've hit most recently, the point ones and whatnot, small bits of uranium, small hits of uranium mineralization that most companies would kill for, because one could say that we have a discovery, but the major discovery doesn't come until we get the larger intersections and the higher grade.
Yeah, it needs a little bit more work, but it shows there is uranium over there. You need to find it in a. You need to find the directions, the depth, so and all things. I understand.
Yes.
Jason, my favorite project in your portfolio is actually Murphy Lake South. Why? Because that project is situated in the proximity of the La Roque Trend. That's a
Yeah.
conductive corridor which hosts the highest grade uranium deposit in the world, Hurricane deposit. So,
Yes.
what is the plan there?
So the planet Murphy Lake is somewhat similar to Hatchet. We have historical uranium mineralization, quite good. 0.25 over 6 meters is a historical uranium mineralization below the unconformity. I might mention both Hatchet and Murphy are shallow at depth to
Yeah.
the unconformity. So you get a good bang for your buck. You don't have to drill too deep. So what we'll do is we'll go in and start drilling, and I would suspect that'll be in the summer. And we'll start to do the same thing as we do in Hatchet and drill off, at these graphitic faults back to the unconformity. And I expect there should be a lot of excitement given, that we're proximal to the Laroque trend, and it hosts many discoveries. So yes, that should be an exciting time, and I think you'll see us in there in the summer, quite sure.
Okay, when you say summer in the perfect world, when would that be?
Early summer.
Early summer. Okay.
Yeah.
And do you
Yeah.
have any idea of how many meters do you plan to drill there?
The meterage is anywhere from 1,500 meters to 2,000 meters to start, and just like at Hatchet, um, we're saving enough in the hopper to go back in to these properties if we see what we think we're going to see from these drill programs. So we start off with 1,500 meters, 2,000 meters, and then we look at our assays and see what we have accomplished in these drill programs with the opportunity to go back in, because Hatchet is permitted. I think you'll find that Murphy, you'll hear about how we've applied for permits there, and that shouldn't be long to receive permits. So they're good for a year after that. So yeah.
Okay. What about CLK properties? What will you do there? What's the
Well,
plan?
CLK is a very exciting situation because you have to go all the way back to the 1980s, where close to 1% uranium was hit in two holes, not one, but two. And we want to go in there with you know, with the type of drilling that we do now, which is better than the 1980s, and see what we can go hit. So that is very simple. You go twin these holes, but we'll do it much more than two times, and we expect that property to be, Q3, end of summer, Q3. We'd like to go back in and drill a few holes right there where we've had previous historical success.
Yeah. You have established collaboration with Denison Mines. So, how is that going so far? And is Denison actively engaged in this exploration program in some way?
Yes, very engaged. We just talked about CLK. Jody DeRouge of DeRouge, who is on the committee that decides where our drills go and goes through the amazing amounts of data along with the Denison crew. CLK is his favorite property go drill because he knows about the 1980s discoveries, really. And he collaborates with Andy Yuckaluk, who is their VP of Exploration, who's an advisor to our company, and also David Cates. Yes, Denison is very, very proactive with our company. I'm actually so surprised. They're a very large company, and they're developing one of the next uranium mining situations. They have a lot of time for us. They help us in
Excellent.
many, many ways, not just financially, but as we're talking technically. And between myself, Dave Cates, Jody DeRouge, and DeRouge Exploration, and Andy Yuckaluk, and the team at Denison, we think we've got the highest probability of going in there and really doing something with the drill on our drill ready properties.
Yeah, that's a very experienced team with
Yeah, lots
Jody. Yeah,
lots
yeah,
of
yeah.
lots of discoveries.
Lots of discoveries.
Uh, and that means something when you're going back in to try find new discoveries.
Yeah, agreed. When you mentioned finding new discovery, let's say you find a discovery, you find a big hole with grades up to, I don't know, 20%, 30%, something like
Sure.
that. Would you, in that case, would you stay focused on that discovery and explore the other nine projects you have, or you would only stick to this discovery and all your and basically all your money put in in that project? What's the plan here?
Yeah, well, the good thing, Lucian, is we do have flexibility. We have flexibility to make those decisions whereby foremost clean energy makes the final decision. So if we were to hit the discovery that you speak of, I think we would focus our attention on that discovery, and we're free to do so. We don't have we haven't committed necessarily funds whereby we can't take them away and put them into this so-called discovery we're speaking about. So we have a lot of flexibility, and I would say yes, for my shareholders and creating shareholder value, I would want to go and focus on the discovery. And explore it as quickly as possible. Obviously, if you hit a discovery in the Athabasca Basin, where all the highest grade discoveries in the world are from, where so much uranium comes from, and they have so much infrastructure, mines, mills, roads, hydro. You get a re-rating right away when you hit a discovery, and that's what we're looking for our shareholders. And we would go and focus on that discovery, and we'd be fine to do so. It wouldn't hurt our earning
Yeah,
rights.
I
Yeah,
said 20-30%. It doesn't have to be 20-30%.
yeah,
It's too much, but
that'd be
it
nice.
yeah. But definitely in that part of the Athabasca, there are some brilliant discoveries, and we already mentioned Hurricane deposit, actually one of the highest grade deposits in the world. Okay, Jason, we covered the uranium part. I want to hear other company developments as well. In early February, the company announced commencement of trading of its spin-out Rio Grande resources. Now, for the viewers who do not know the background story about this transaction, please explain a bit how this transaction happened and what are the key benefits.
The benefits are that if you were a shareholder prior to us issuing two shares for each one share, you receive those Rio Grande shares, and they're listed on the CSC under the symbol RGR. That's Rio Grande Resources. So our silver gold properties, these are three historic mines, very high grade mines that have been in production in the 80s, and a lot of production actually 100 years ago when they had the silver rush in New Mexico. These properties are near Silver City, New Mexico. So, an amazing precious metals company that's going to go and drill and hit. Well, the first go around should be great results because we're going into where they mined before, and we'll go and drill off and see what kind of grades we get, which I suspect will be very high. So the benefits are to the shareholders that owned it pre. One of the tough things that happened was just as we were issuing the shares, we issued new units of Foremost and Rio Grande on that weekend, I spoke to you about where there
Hmm.
was deep seek sell off in the Nasdaq market on the Thursday, and then by Monday of the following week, when was the first sell offs for the Trump tariffs. Now, with our QSIP changing, nobody could buy the shares, so we were pushed down quite a ways, and that's why we're such a great uh, buy right now. I think it's been overdone. Like I said, we're below 3 times lower. We've sold off 70% from our even our financing price. We raised 10.5 million, so I would suspect we'll trend back to that financing price,
Got it.
which from here would be 3 times in value. But great value for our shareholders to have that those gold silver shares, and I'm looking forward to delivering on Rio Grande also.
The reason why I ask you that question is because you have lithium lane projects in your portfolio. So could we see a similar scenario for that?
Well, I can point out to you near the lithium commodity high, I did sell for $3.5 million, 60% interested in Northwest Territories lithium property that we share with Patriot Battery Metals. You might have heard of them. Um, and I got 3.5 million cash in 40 days. So I do know how to go and create good shareholder value with our lithium assets. Our Manitoba lithium assets, we have a reserve, we have great lithium assets, and in Manitoba, you're not that far away from the Tanko mine, which is one of the only two producing lithium mines in all of North America. A lot of people talk about the one in Quebec, the NAL mine, but they don't talk about the Tanko mine, which is owned by the Chinese actually, but they do business in Canada, and we could send our ore there. So great value in these assets, and yet the enterprise value that we have in our company is almost at zero for the uranium assets, let alone the lithium assets.
Yeah.
That's why I think the market's missing the boat, and they should look at foremost because you're getting a lot of value for buying our shares right now. But so far as a spin out, I do know how to do that. Obviously, I also would suggest that there'll be other corporate developments in the lithium space for our company. Everyone will have to wait to hear those, but I won't take a spin out off the table. And I
Okay.
also won't take something like selling 60% interest like I did a few years back for 3.5 million. So it's all about the art of the deal, and there'll be more information come to the market in the near term.
Okay, fair enough. Jason, I wanted to ask you about the listing on Nasdaq. You are actually one of the few juniors that have listed stocks on such a big stock exchange. So, how are you profiting from that?
Um, I think the value that's going to be created on the Nasdaq is yet to come. Like I said, just before at the end of January, we were starting to do well, and the reason why the Nasdaq is phenomenal is you will see shares go up 300, 400% in a day, and that's not a surprise as capital comes from such a large capital market and so many retail shareholders in the U.S. They sort of all come at once sometimes, so you will see a huge run up sometimes on the stocks, and that's where we would benefit if we get the attention. And we did have that attention in late January, and then the opposite happened. So it has been a little tough on our share price, but I expect the inverse to happen here soon. And I think that the good thing about a Nasdaq listing is when you are when your shares are being bought up, and you're getting that nuclear power trade, and those people are coming along that want to own nuclear power because there's a big high tech component. People that like to buy nuclear power. Well, if you get to a high enough price, you can do very large financings on the Nasdaq. So there is an ability to go and market yourself to a much wider audience.
Yeah. with regards to your cash position, how much do you have right now in the till?
The till is 6.5 or 7 million at the moment. So we're fully financed, and I don't think that we'll go back to the market until the latter parts of the year.
You don't see any difficulties in raising money today? I mean, in general, not for your company. For junior companies, do you see any difficulties in raising money in 2025?
I think at the moment and over the next quarter, let's say, unless things turn, that it will almost be impossible for a smaller company without a partner that is a $1.5 billion partner, a developer that is there for you financially and technically. So we de-risk ourselves. But is there risk to a junior uranium explorer that isn't financed? That's going to be tough. So I'm glad we got it out of the way, and we're in a good position. But yes, the market just seems like an the market seems broken, is what I can say. So that's what we say in the industry. The market's broken, and there's a disconnect from
Yes.
any kind of valuations that we feel should be there, even in the precious metal space. Gold hitting all-time highs, silver heading towards all-time highs, and yet the gold miners are at their lower end of the valuation. It's sort of the way it goes, I guess, and that will turn eventually. But I would not like to be in a junior miner or an exploration company that isn't financed in
Yeah.
this market, because you might not get financed.
Yeah, unfortunately, yeah, rough times for small, I mean, tiny companies that don't have sufficient funds. It's really not easy to raise money. Jason, share structure. So 1/5 is owned by Denison. Can you give me a shareholder breakdown? So we have Denison.
Well,
How much is skin in the game? The big boys, the retail.
yeah. So I myself own over 7%. So that's 20% our strategic shareholder Denison, 7 myself, and the other there's not huge percentages, but we do have the uranium participants that come into companies like us that own shares. So I don't know if I can get it to percentage terms, so less than 1% with the different funds that frequent the uranium space.
Okay. Final question. Newsflow, can you tell our audience what can they expect in terms of newsflow in the next few months?
So that's a good thing about owning Foremost. There's lots of news always. We have drill happening,
Drill,
and a
baby, drill.
constant drill, baby, drill, um, and a constant flow of information to try to, sort of wake the investor up to how drill ready and discovery ready these properties are. There's a lot of historical uranium mineralization. We have amazing targets. So we will be having a lot of news releases that talk about our exploration, drilling, and follow up, and also information that'll hit the market so far as educating people on what these properties should be worth and we're not getting the value for now. And but there'll be corporate developments, as we mentioned earlier on when we talked about my career. Um, Corporate development, that's part of the business I enjoy. And stay tuned for any corporate developments to go on, or any new people, let's call it new people joining that might help us get the kind of valuation that we feel we deserve, which is 2-3 times higher at the minimum than this price. So stay tuned for lots of news all year long, and that's what happens when you have a $6.5 million drill program coming up. Lots of news as the year goes on.